This is Money from bsc2nse.com. In this video, I'm going to talk about the Nifty pre-open market. The pre-open market and the Nifty chart during the pre-open market, and how you can probably use it into your trading and futures and options for intraday. So a brief introduction on the pre-open market is that earlier, maybe like 4-5 years back, I'm not sure exactly when this concept started, but before that, the markets used to straight away open at 9 o'clock, and there used to be the market will just straight away open at 9 o'clock, and the buyers and sellers, the overnight buy and sell orders, everything will they'll just straight away absorb right away. The exchange will straight away absorb, and then there used to be huge volatile moves within Nifty and stocks in the first few minutes of opening the markets because of a stampede kind of a situation. So imagine a marriage hall, where dinner is announced, and the marriage hall, the dining hall capacity is only 100, but there are 500 people waiting to take dinner, right? So there used to be a lot of stampede kind of situations wherein Nifty would open by 50-100 points up and then go down by negative 50 points within like few minutes. So that kind of a volatility used to happen. So to avoid that, the pre-open market concept was started. Here what they do is between 9 o'clock to 9:08, the first 8 minutes, the exchange will collect all the orders from buyers and sellers, and they'll not execute. No order gets executed here. They'll simply collect the buy and sell orders, overnight orders, and then fresh orders in the morning, and then arrive at a fair open price instead of opening at a spiked up value or a spiked down value. So they collect all the bids and offers, and based on the bids and offers, they arrive at a fair opening price, and then they give 7 minutes of silence between 9:08 to 9:15, so that the buyers and sellers overnight they check the open price of the pre-open market, and they digest that, and then when market eventually opens at 9:15, both the buyers and sellers calm down, and then they don't kind of create the panic sort of a situation, and they take kind of a proper a calm kind of a reaction to the market. So so what they basically do is they cut out the unnecessary volatility that gets created by huge amount of overnight orders coming in and fresh orders coming in, all getting stampede into opening price. So instead of that, 8 minutes they collect the orders, and then they show the opening price to both the buyers and sellers, the fair value, and then they open the markets after 7 minutes of silence. So this is what the pre-open market is, and it's actually very effective. If you had known stock markets before the pre-open markets, there was huge unnecessary volatility which causes unnecessary losses for the traders, and this is pre-open markets has been a very successful concept that has been implemented. And the good part now today is in this link from NSE, you can see at least the Nifty. I'm not sure if you can get the same thing for the stocks. You can see at the bottom of the small chart here 901, 902, 903, and then till 908. So the first 7.5 minutes or 8 minutes of Nifty volatile movement because of the pre-open markets. You can see that there's a spike at the start of the day, which is on the left. You can see Nifty values 946080 until 9540, and then when you move the pointer here at the top, you can see the Nifty value at the various points in the chart, and you can see at the start of as soon as 9 o'clock the pre-open market opens, you can see a spike at the top, and that is the value of 9547. So that is the highest point in the pre-open market, and the lowest point is pretty much the open price 9478. So there's a good 70 point or a 60 point gap between the lowest value and the highest value in just these 8 minutes of pre-open market. And this kind of looking at this chart, you can make out the trading range for the day for Nifty. And today actually, as soon as market opened, Nifty went down below this value 9478. Here I can show you. So this is a Nifty intraday chart, and you saw the pre-open markets. You can see here that the markets opened at 9478, and as soon as the market opened here, Nifty immediately went down on overnight. Global markets were down, so it slipped below the pre-open range and went down and took support at 9450, and then started rebounding, and after a while it came back into the pre-open trading range of Nifty for the day, and it eventually took support at 9478 or 9480, and 1, 2 and 3 times here, and then eventually went up towards the upper range of the pre-open range. The highest point for Nifty spot for the day was 9535, which is 12 points short of the pre-open high spike value. So basically what I understand is that the pre-open range gives the extreme price between the price expectation between the buyer and seller for the day, and you could probably expect Nifty to trade within this range. So if it's trading slightly above the lower range, then you can look to go long, or similarly if it is close to the upper range, you can look to book profits or cover get into a short position for the day. So you can try and so this can be very useful. You'll need to observe this for at least 10 days and then take a call on trading how you can use it. Now yesterday was a expiry day, and the pre-open range high was 9586, and the futures day high was 9585. Spot price was 9575, and from there Nifty crashed by 75 points towards the day low range of the pre-open market, which was 9500, and again 9500 held almost. It finally broke in the closing minutes by 5 to 10 points max, and then eventually Nifty managed to close about 9500. So even today, except for the initial first 15-20 minutes, it was below the for first half an hour it was below the lower range of the pre-open market, but rest of the day from here, from around 10 o'clock or 10:30 till the rest of the day, it was entirely within the pre-open range. So this can kind of give you a little bit better view of what's the trading range for Nifty for the day, and you can trade accordingly. And again, like I said, I've been observing this for only a few days, and I believe this is pretty important for intraday, and you can look at it too. And based on your observations, it doesn't mean that it will never crack below. It can. There are days when there's a huge negative news overnight or a huge positive news overnight. It can break above or below and go below and go below and go above these range values, but I think 8 to 9 8 days out of 10 days, Nifty will mostly roam between this high and low value of the pre-open market range. So you can use that pretty well for trading, and you can even see spots where Nifty tends to spike and then drop below. For example, 9525 here was top here, and then eventually Nifty saw some selling which pulled the price down. So 9525 is also an important level to watch to maybe book profits if you go long from 9480. So these are things that you can make note, and if it helps for trading, then I think we should probably use it. If you like this video, subscribe to the YouTube channel and stay in touch. Any questions or queries you can post in the comments below. To get a free training from bsc2nse.com, check out bsc2nse.com and fill out the form below. Thank you. Bye bye.